everybody. I hope you're doing well. Wanted to share with you one final lesson for 2018, and it should be considered one of the most, if not the single most important lesson um, of 2018. I actually started recording this video a few minutes ago, 20 minutes ago, and then halfway through it, I lost I guess the sound dropped, and so I'm having to start over here. But not a problem. I will do it again. And I wanted to again talk about the only three things that matter in trading. Do you know what they are? Only three things that truly, truly affect the bottom line. What do you think they are? If you're watching this video live, please hit the like button or just say hi so I know you're watching it. Or if you come in later, feel free to leave a comment or hit the like button. I find great satisfaction from knowing my lessons are making a difference. So the three things are, my friends, the frequency of your trades. So I call that the number of your trades. The number of trades we take per day, per week, per month. The second item is the Sharpe ratio, which the Sharpe ratio is your average winner divided by the average loser. So if your average winner is, say, $200 and your average loser is 100, you would be said to have a Sharpe ratio of 2.0. And then the third item would be your batting average. So batting average is how well you bat. If you, let's say, take 100 trades and you lose on 50 of them and you make money on 50, then you would have a batting average of 50%. I wanted to run through an example for you so you understand how these affect the bottom line, these three items. There are other items that also impact the bottom line, but these are the absolute most important three items. So if we were to say, if we were to go with 6 trades per day, that seems like a reasonable number. I'm actually at 6.7, my average trade per day. It goes up during earnings season, goes down during the rest of the year, like today is, we're in December, holiday week, very slow. So just really one trade. Now, yes, I tried them, but they didn't go anywhere. So just one trade. But during earnings season, I might average 10 trades per day. Year round, I average close to 6.7. The Sharpe ratio, let's say 2.0, which means your average winner is twice as large as your average loser. Batting average, just for simplicity, let's go with 50%. So 50%. Okay. And then if we were to create a table, one column is for the wins, another column is for the losses, and this would be your metrics. Let's say we said you average 6 trades per day and 6 trades per day, and you bat 50%. In this case, 6 times 50%, 3 wins and 3 losses, 6 times 50% per trade. So that would be the Sharpe ratio, right? The winners make twice as much as the losers. So for the winning trades, whatever the number is, you just make basically twice as much as the losses, or they're twice as big. Okay, so 2 versus 1, -1. I call that a risk unit. So 2 risk units versus 1 risk unit per trade. So gross for the day would be, let's see, I'm merging the cells. It would be, oh no, I shouldn't have merged. So for the winners, it would be 3 times 2, so 6 R's, 6 risk units. So if you risk $100 per trade, that would be $600. For the losses, you lose $300 or 3 risk units, right? So net, or let's go with subtotal, it would be 6 minus 3, or you average 3 risk units per day, Per week, it would be 3 times 5, right? That's 3 times 5. That would be 15 risk units. And per month, it would be 15 times 4. So that would be 60 Rs, or risk units, per year. It would be 60 times 12, or 720 risk units. Now, if you risk per trade, let's say it's $100. If your risk per trade is $100, then your total would be 720 times 100. So you'd make, merging the cells, you'd make $72,000. Now, total, assuming at $100 a trade. So at $100 a trade. Total at, let's say, $200 a trade. It would be 72 times 2. It would be 144,000. If, like me, you risk $500 per trade, so we'd just copy this and change it to 500, it would be 720 times 500, or $360,000. Now, I'm aware that we also have expenses. If you have a home office, you have obviously utilities, computer expenses. Let's start with the biggest one, which would be the commission expense in the beginning, because if you're, in the beginning, if you're trading small size, your commission is going to make up a large portion of what you earn. Whereas once you go up in size, then it's not going to be that significant compared to what you generate. For example, if you take 10 trades and each trade you pay $5 per trade, flat rate ticket of $5 per trade. So we said 10 trades times 5, whatever, that's $50. It's, one for the entry, one for the exits. It's $100 a day. If you risk also just, let's say, $10 a trade, and you make $100, but you also end up paying $100 in commission, then you're a break-even trader. So you actually do make money, but your size is too small. Once you scale up, if let's say you average, you make $2,000 a day, then $100 is not that big of a deal, because you're actually making a good amount of money. And it is just a matter of getting the experience and increasing your size. And then commission becomes not as significant compared to what you make. But let's just say, $30,000 a year or whatever it is. Again, for somebody who doesn't trade the size, you might think 30,000 is a lot, but it isn't necessarily. It just depends on what size you trade. Let's merge the cells there. So let's say that's $30,000 expense. Computer equipment, let's say you get a new computer every year, though that shouldn't be the case, for $2,000. Utilities, right? Let's say $100 times 12, that's $1,200. Trading platform, software, let's say it's $200 per month, or something like this. Maybe more, maybe 300 times 12, that's 3,600 for the year. And then trading room, if you're in a trading room, which I think everybody should be, trading room, let's say it costs $200 a month, or $250 or whatever, times 12, that's $2,400 a year. Education, continuing education is a must in my opinion. Let's say you pay $2,500 or $5,000 a year. So these things do add up. The total of this is $41,000, 41,700. But again, if your size is decent, if you're risking $500 a trade, you would still end up with um, you'd still end up with, so 360 plus 30,000, or minus 30,000, minus 2,000, minus 1,200, minus 36, minus 24, minus 25. You'd still end up with 318. And again, in the beginning, that sounds like an incredible number to have, and it is. That's why, and it's really not easy, because even though it sounds like these things are easy to achieve, they're not, unless you know what you're doing. For example, your batting average depends on the quality of your trades. You need to select high probability trades, and you also need to have the discipline and the patience to wait for them and not settle for low quality stuff. But how do you know if something is high quality or not? Well, you need to make sure you know what you're looking for. You need to have the education and the experience. Your Sharpe ratio is affected by how well you manage. So you need to learn proper trade management. You also, for Sharpe ratio, you also need to select trades with high reward to risk. What's reward to risk mean? Reward is, you're assuming a long position. It's the difference between your target minus the entry. And for risk is your entry minus your stop price. So for example, if your target was $12, right? $12, and your entry was $11, your reward would be $1. And if your entry, we said, was $11, and your stop, let's say, was $10.50, then your risk is 50 cents. If the play reaches target, you would make twice, you would make twice as much as you risked. Does that make sense? So 1 divided by 50 cents, it would be 2.0. So again, for Sharpe ratio, to improve your Sharpe ratio, you need to improve your management, and you would also need to select trades with high reward to risk. For number of trades, you need to be in the right market, meaning there's a lot of traders that are, there's a saying, go where the oil is. Does that make sense? So you have to make sure you're trading a market that's active, that's moving, not a stagnant market. But the biggest, I think, benefit of a trading room is the generation of ideas. That's probably one of the most important things about being in a trading room, even for somebody who's really, really good, really experienced, like myself. I still benefit from being in the room. Imagine me trying to find trades all on my own, which I can do, but it's a lot easier when you have 300-400 other traders, 300-400 other set of eyes looking for the same exact patterns that you're looking for. Does that make sense? It becomes that much easier to find the trades. So that's the benefit of being in a trading room, that with traders, with like-minded traders that are looking for the same exact things. And as I said, this is actually an example that I took right out of my trading plan. But for 2018, I exceeded these ratios. My Sharpe ratio is about 2.5. Let me insert a table here so it looks nice and clean. And my batting average is close to 60%. I think it's 58 or 57 point something. So that's 57, that's 2.5. And look at the difference in numbers now. We go from gross, at least. Is that right? So we went from So from 360, let me just make sure the numbers are right. So at 500, yeah, we went from, let me just take a look. So this is 500. So we went from, doesn't look like much of a difference. Let me just, from 360 to 410, should have a much bigger difference. Let me just make sure I have the math right. So it's 810 um, times 500, right? Is that right? So that sounds about right. And then if I were, I mean, so that's 400 divided by 12, that's 33. I do better than that. So I think the math might be wrong. Let me just see here. I opened an account with T3 Securities. Very, very happy about it. That I finally made the plunge and went with T3 Securities. I opened it in October, but didn't really start trading it until October. Let me just move this out of the way so that in case my mailing address pops up. Didn't start trading it until October 9th, and then even in October, I went to New York for 8 days, so I didn't really trade it very much in October. So this is just looking up the statement for October, and again, I'm just trying to make sure that my private information stays private. So again, made $3 in interest, it looks like, because I opened it with $100,000, and then at the end of the month I was up 47.39. I mean $47,000 net after commission, after everything. That's for October, and then for November, um, so from 147 to 193, realized 52.5. So that's where what I do. Of course, these are earnings season months. So for December, not as good, but for December, still okay. Okay, for December, I can't show you because it's the month is not over yet. So I guess the statement is I can't generate it yet. But again, that's what I'm able to do with just 2.5 Sharpe ratio and 57% batting average and risk per trade $500 per trade. And then trades I average about 7, so 6.7 I guess is what I average. And you can see in trading, most people think that in order to make a huge difference to the bottom line, you need to make huge changes, really big changes in your trading. But that's not true at all. If we just change the Sharpe ratio from 2.5 to 2.0, it would make a huge difference. If we were, I'm trying to make sure the table is working right. Am I, yeah, I'm trying to make sure. See, these were not formula driven, so probably the table isn't correct. So 2.0, that depends on the Sharpe, so times, hold on just a second. So, oh yeah, this would be the Sharpe, 2.0, always -1 for the losses. So again, if we went from 2.0 to 3.0, let's say, huge difference. Huge difference. Per day, you go from 3.8 Rs to, we go from 3.8 to double. You double your money. Basically, you double what you make just per day. If we go from 50% to 60%, you go from 6.7 to 8.0. So again, and if we go from 100 to 5, I mean, that's 5 times as much. So you don't really need to make huge changes to your trading. You just need to focus on what really truly matters. And I told you what it is. It's these 3 items. The size does matter also, big time, but I wouldn't worry about it in the beginning. Start small and scale up. as you gain confidence, experience, and it's just a matter of adding the zeros, scaling up. Does that make sense? So those are the three most important things in your trading. And I hope this video was beneficial. Hopefully the math was simple enough. The table kind of got messed up, I guess. I don't know if it did or didn't really. But when I plugged in my ratios, they didn't make much sense. And I think because I didn't, not every cell was formula driven. Some I just kind of typed in the number. But I hope this video was beneficial. As I said, to me, this is the most important thing to know about trading, that you don't really need to make drastic changes. If you know what you're doing, you just need to focus on the three things that truly matter in trading. And I told you how to make them better. The number of trades, easy. Join the black room. I'm not kidding. Just join the room. Or scan more, work harder, spend more time looking for trades, be in the right market. So that's how you increase the frequency of your trades. Sharp ratio, you would want to learn how to manage, focus on the golden rule of trading, which is let the winners run and cut the losses short. That's what the Sharp ratio is. It's the golden rule of trading. In order to do that, you need to manage well. You also need to only play trades with high reward to risk. And then number three, you need to cut the losses, get out of the losses quickly, the losing trades. And then batting average is basically, it has to do with how well you select the quality of your trades. So you need to look for high probability trades. In order to do that, you need some education. You need to know what they look like, taste like, smell like, so that the moment you see them, you don't even have to think. When I see something good, I don't even think. I know exactly what needs to be done, and I just do it. And then the size, wouldn't worry about it in the beginning, and it just becomes a matter of scaling up. Okay, that's it. I hope again you enjoyed this video. As 2018 draws to a close, I want to wish you a wonderful, happy, healthy, successful year in 2019. Let's go big in 2019. Let's make it happen. I'm very excited about the new year. I think it's going to be the best year in my trading. The market, the volatility in the market has come back, and things are moving very much. Next month we're going to have earnings season. If you'd like, join me in the black room. If you're a swing trader, join the strategic swing trader. I also do extremely well during earnings season in both in my swing account as well as my day trading account. So that starts January 15th. I think JPM kicks it off. January 15th, maybe even January 13th or so. And I also want to wish you all the best in the new year, in your trading, but also in your personal life as well. Thanks, everybody, and have a good night.